Hello there. Welcome to the latest video with Finsbridge Wealth Forum. And today we are going to be talking about the dreaded two-letter word inheritance tax. Some people refer to it as the death duty. And today to talk about it, we've got a real expert in this field, Nick Bird from Triple Point. Nick has worked in this industry for the last 25 plus years. Nick, welcome.
Thank you. Nice to see you, Rohit.
Nice to see you too. So, Nick, why is inheritance tax referred to as a dreaded tax?
Well, it's a significant tax. It's a tax on people that have saved carefully all their lives. People care about the tax because they care about their children. They care about their grandchildren. So as much as it's about tax, actually it's about love, it's about connection, it's about things that matter to you.
Absolutely. So, when does this tax apply? From my understanding, when you die, the government wants a chunk, maybe 40% of whatever you've earned.
Yes, it doesn't apply to every person. There are allowances given to you by the government, and they're not very nicely, not very easily named. There's something called a nil rate band. What's that? It's the first bit is free, so £325,000 per individual is free from inheritance tax.
Mm-hmm.
On top of that, there was a new piece of legislation, not even that new anymore, called the residence nil rate band, which is potentially another £175,000 on top of that. So for an individual, that could be £500,000 with no inheritance tax to pay whatsoever. Talk to an advisor about that properly, around understanding how those allowances apply to you. And if you're married, one of the many benefits of being married, you also get to double up those allowances to mean, rather than being £500,000, now it's £1 million between the couple. And that would mean that if you're sitting there as a couple watching this right now and you have less than £1 million, when actually, and again, subject to talking to an advisor about all these allowances applying to you, it's likely that you won't pay any inheritance tax. But above that, as you rightly say, above that, it's a 40% tax on the asset above that amount. And clearly, with the way things have changed over the years with house prices and so on, a lot of people just from their simple home are using up a lot of those allowances. And on top of that, their careful, prudent saving could well be impacted by inheritance tax.
Yeah, indeed. And around where I am and you are, this is a real threat because many homes are over sort of 600,000-700,000 mark. So one solution, there you go, guys. If you're not married yet, then maybe you want to get married. On that note, any information or input we share today is purely for your awareness only. Like Nick said, seek advice on your individual situation, and we are very happy to hear from you. The contact details will be down here, and you can reach us by email, telephone, or you can book a meeting in my diary. So, Nick, what you just mentioned, is really worrying because when I think of it, my clients, they're normally very successful entrepreneurs or higher rate taxpayers. They're employed C-suite executives. Well, those type of clients, right? They pay between 40 and 45% tax on their income, right? And then they have cleverly saved and invested prudently. They might pay, 20, 24% tax on their gains. After having done all that, they've saved up a nest egg and they're hoping that it goes to their children, right? But what you're telling me is that the government wants a 40% chunk over the allowances that somebody might have, right? That's worrying, isn't it?
Look, I think it is a worry for many people. And I think that it's interesting. The person that has the money doesn't suffer the tax. So if you are sitting there saying, well, I've saved all this money and there's a big tax on my money. Well, actually, it only happens on someone's death.
Yeah.
But actually, the worry is I worry about my legacy and how that is passed down. I love my children and my grandchildren, and I have saved carefully. And ultimately, use the money and enjoy your life. And we'll talk about some of the planning bits in just a moment. But I think for many ways, it's really a question of how have you written your will. Mm-hmm. That's the first thing, actually, Rohit. When it comes to all estate planning, make sure you've written a will, and again, seek advice over writing a good will. But I do think when people sit down and write that will, they really do have a think about, right, who matters to me? What matters to me? Maybe what charities matter to me? All sorts of different things there. But very few people choose to write the Chancellor in their will. And yet they'd seem, for many clients, to be a fairly heavy beneficiary of their saving. And it doesn't have to be that way. And again, with good planning, for good advice, it doesn't have to be.
Yeah, it doesn't. And what was the bill like? 7.5 billion is what I hear.
Yeah, it's a growing tax. There's no doubt about it. So, in many ways, there's a huge swathe of the country that are not impacted by it
Mhm.
whatsoever. So,
Yeah,
I think it was maybe about 4% of deaths paid inheritance tax.
yeah.
But I think in the world of financial advice and financial advisors, it's a much heavier percentage of your client bank that are perhaps engaging with an advisor about their wider wealth and then about their wealth on their demise. It's something that will come to all of us, unfortunately.
Yeah, certainly our audience listening in today is by definition either there or expect to get there.
Mm.
And there is a concept of fiscal drag here, isn't there? Which means they haven't raised the allowances since 2009, if I'm not wrong.
That's correct. So the what's known as the nil rate band, again, as I said, that your sort of your freebies as such, that has been frozen since 2009, and it was in the last budget that was extended out to 2030. So that's a good, with 21 years of frozen allowances at a time when obviously other assets have been going up in value, inflation has been coming through, and so on. So
Yeah.
house prices have gone up significantly over that period of time. So there is that sense, as you say, that fiscal drag or stealth tax or those sort of things has definitely drawn more people than ever into the inheritance tax discussion. No
Yeah.
doubt about that.
No wonder Rachel Reeves is smiling these days on television. So, clearly, if you are affected by this problem, one of the options is pretend it's not going to happen to me. But guess what? Death is going to come one day to us all. But most of the people listening are savvy, so they want to do something about it. So, what are the strategies that they could follow? One of the strategies I've heard is just gift it or spend it. So, how do you see that?
Yeah, I think let's start with this in a very simple way. You're absolutely right, Rohit. You don't have to do anything about it if you don't want to. It's
Mm.
absolutely right to pay tax and be part of society. And if that's an option you want to go down, that is an option available to you. As you say, it's a pretty significant tax. It's quite a large check that we've written to your revenue on your passing. And that's not normally the intention of people. I think many people come to this planning thinking it's about depriving themselves. Well, I have to give everything away. Now, that is an option. But I go back just one. Don't forget, spend your money and enjoy your life. That's almost the best form of estate planning.
Yeah.
The phrase I've used an awful lot here is that when you retire, you should learn to ski. You go, what do you mean by that? Well, I'm not skiing at that age. It's an acronym: spend the kids' inheritance. And
Amazing.
get out there,
Love
enjoy
it.
your life, enjoy all the smiles that are out there.
Yeah.
And again, it's very good when you engage with a financial planner. They'll often go through planning tools to work out how much money do you have, how much money could you spend,
Yeah.
and almost give them the financial freedom, the financial permission. I
Yeah.
give you permission to go on that holiday, do that thing, buy that silly shiny red car,
Yeah.
whatever it might be.
Yeah. Yeah.
But
We do that with all of our clients, right? We use Voyant, which is a very sophisticated cash flow software. So the first question you want to answer is, how much do you need?
yeah,
Okay. So that starts with what you want: your shiny car, holidays, giving money away for grandchildren, their holidays, whatever it might be. Um, and then you work out that there is a certain sum of money that's surplus, right? And then you talk about the gifting strategy.
yeah,
But the thing is, you could gift away all your money, right, above the threshold, and get rid of the liability. You have to survive 7 years, okay, generally. But there is a conundrum there, isn't it? You don't know how long you're going to live.
yes, that is a real difficulty, Rohit. And so it's a problem for all of us. None of us know when we're going to die, so none of us actually know how to live. So if it was tomorrow, we'd be on a beach right now, Rohit. But actually, we don't know. And that's the difficulty of knowing that means the difficulty of planning. Sometimes you can be looking to balance your planning because you just don't know how much money will I need, how long will I live,
Yeah,
what fun will I have, but also potentially what other worries might come through. The most typical one of those are potential care costs, which
mm,
can be incredibly expensive.
mm.
And I can understand why some people want to hold money back for those what ifs because they may happen. And that's always a concern and a consideration.
Yeah, and that is the challenge I often hear from my clients. So they, on one hand, want their children to receive their money when they die, but on the other hand, they're worried about if we give the money away, then that money is gone, right? It's not with them anymore. And if they, God forbid, need care at the end of their life, costing up to 200, 250,000 pounds a year these days, right? Where are they going to get the money from? The same challenge applies to, we do sophisticated trust planning. So trust is a legal entity with a life of 125 years. So you can use it to pass on wealth. But again, generally, if the money goes into a trust, then you can't have access to the capital. Some trusts will allow you access to the income, but still not access to the capital. So that's the challenge, isn't it? So really, to me, it sounds like for a certain part of your assets, which you really need to have available, you need a solution that gives you access, and you need a solution that's available to you and yet gives you some sort of advantage. So is there such a magic solution, Nick?
Well, you set that up nicely for me there, Rohit. So that's the area where we help clients alongside advisors. So the relief available to you is called business relief.
Right.
It's a relief that's been around for some time. So it was introduced back in 1976. So that's nearly 50 years. It was a relief that was mentioned quite clearly by the Chancellor in the last budget. And there you have an opportunity to invest into certain qualifying investments. And that's where to say again, seek advice to understand what those investments are and how appropriate they are for you and so on. But those investments are simply your money. It's your money. And as long as you hold those investments on your death, as long as you held those investments for at least just 2 years, then you have a full exemption from inheritance tax for the first £1 million of investment.
Right.
So that gives you fairly significant planning, and it's £1 million per estate. So a husband and wife may be able to use that £1 million both. But the simplicity of that, as you say, it's almost what it's not. This is not a gift. This is not under trust. This is simply your money. And should you need that money, it's yours. Now, again, subject to the underlying investments you look at and parts around there, there's some consideration, again, needs advice around that side. So speak to Rohit. But outside of that, it's really trying to carry out the wishes of the will, which is what's yours in your lifetime is yours. And when you're not here, it's I want these people to get it because those people matter to me.
Yeah. So it sounds like it answers the question I asked you, which is how does one get a solution to this conundrum, to this dilemma? What if, right? What if I don't think I need this money today, but what if I needed it for anything else in the future? So it looks like business relief investments up to that £1 million allowance per estate can actually help achieve that.
Yeah.
And to add to that, what we have as a solution now is effectively creating a business relief trust into which you can put your business relief investment when you die. So that way you can use the husband's estate first, let's say, and the wife's estate later, and you would effectively use up to 2 million, right? 1 million each, which is going to be really effective. But Nick, what should one really do if they want to know more about this and consider their options?
The answer always, speak to a good financial advisor. So that's exactly why you're there, ready, willing, and able to help people, Rohit. I think what I always come to this is that every circumstance will be very different. So it's very much a personal service that a financial advisor provides you there. And the way I see it is that there is a financial planning jigsaw sitting in front of you, and every piece will play a part. So there is no one answer to this planning. There is a combination of answers to come together. But with good advice, you can tailor that well to exactly what is wanted for the person and ultimately for their family.
Great. So what I've gleaned from this discussion as a conclusion is that it's very important to seek advice and to seek that timely. So the clock for business relief is 2 years. For other gifts, maybe 7 years. So you shouldn't just bury your head in the sand and be on your deathbed when you're doing this planning. That isn't practical work.
Rohit, what I would say to this is that if you started with this session thinking, I do worry about this tax and I worry about the outcomes, know that actually there's lots you can do about it. And hopefully that might take away some of that, where I really worry about this. Well, there are solutions and strategies that you can do to negate that worry and to live a great life, live your life to the full, but also make sure that, again, your children, grandchildren are also going to benefit from your legacy.
Yeah, and you put your worries away, you're relaxed, and you know that this is going to work for your children when the wealth passes. And if you still need it for that home improvement or for care fees or whatever, it's there for you to access. So we are very happy to hear from you, our viewers. Keep yourself logged for the next video. Subscribe on the link below so you get notified on whatever is coming in. And if you want to talk to us about anything that we have discussed today, you've got the contact details right there. Thank you. And until next time, ciao.